Hello and welcome back to Coinscrum Markets. I'm delighted to be joined today by Mriganka, Pattnaik, CEO at Merkle Science. Hi Mriganka, how are you doing?
Hi, Paul. I'm good. How are you?
I'm very good, thank you. Thanks for joining us today. So we're going to speak about regulation. It's been in the news a bit recently. We've seen a bit of a turmoil in the markets over the last few weeks. People kind of trying to apportion blame for the sell-off to various things. One of the topics or possible causes that has come up quite broadly has been around the sense of some tightening in regulation across the globe, and especially out of the US. There's been a few new proposals. And in a few weeks' time, actually, earlier in the year, FATF, the Financial Action Task Force, I think in March, published an updated draft guidance for virtual assets service providers, VASPs. In advance of that, while we kind of wait to see what the outcomes are, kind of want to maybe touch on what they've been proposing and talk about how that might be affecting people working within the industry. Before we start, can we just just introduce Merkle Science and tell us about the tools and services you provide?
Yeah, absolutely. So what we do at Merkle Science is provide blockchain risk monitoring tools, which we provide for financial institutions, law enforcement and government agencies, as well as cryptocurrency companies. So we have multiple tools and most of these companies use them in combination. One of them is a compliance tool that enables you to monitor incoming and outgoing cryptocurrency funds and get a risk alert on it. Our other tools include a forensics tool that helps you track stolen cryptocurrencies. So this is used by law enforcement, say when the Twitter hack took place, they would use our forensics tool to track down the criminal. And apart from that, we're working on multiple other tools. One of the other things that the industry has been using quite regularly now is a tool called Know Your Blockchain Business, where we even give a risk score to just a VASP or a crypto company based on their incoming and outgoing crypto transactions.
Okay, thank you. I mean, these have become essential tools for anyone operating in the space, especially dealing with crypto asset transactions. And we'll come on to it soon. Obviously, over the last year or so, we've seen an explosion of interest in DeFi, and I think that's caused regulators to sit up again and take note and potentially have to rewrite the rule book. We'll come on to that in a little bit more detail. As I mentioned earlier, we have seen what seems like a general tightening of regulations or proposals for tightening of regulations in the space. It seems the new Biden administration is maybe taking a bit more of a firmer tone than the previous administration in the US. The US Treasury recently put out a proposal requiring the reporting of any transactions valued over $10,000, which I guess aligns similarly with previous requirements for cash transactions, etc. And even miners, Bitcoin miners, are looking at how they may need to adjust in the future about being compliant, processing transactions on the Bitcoin blockchain. I think that's a much broader topic and one for a debate for another day. I think that might be a bit more of a difficult challenge. But it does seem that as the market's grown, naturally regulators are going to sit up and take notice. So I think it would be a bit remiss to assume that wasn't going to happen. But in your opinion, and working so closely on this kind of part of the sector, why is compliance so important if this industry is going to continue maturing?
Sure. So I think the most important reason that regulators are implementing compliance is to keep users safe. So the last thing regulators want is that a drug trafficker uses cryptocurrencies and or a money launderer manages to structure his funds in such a way that he can transfer them outside of a particular country or between countries easily. So that's the primary reason why all these regulations are in place. In fact, I think it's actually beneficial to the industry because even before Merkle Science, I'd worked for a crypto exchange for a few years. And through the years, I've seen how crypto was always treated as more of a an industry that has a lot of criminal activity, and now it's being linked a lot more to financial services. So even in the document, the budget document that you talked about from the Biden administration, there are several instances where they've talked about financial institutions, and then they've said that crypto exchanges and custodians are also part of that, right? So I think it's just the natural process of cryptocurrencies growing up, where now regulators will regulate it. You can't have a move fast and break things approach to cryptocurrencies anymore, or financial services.
And from your vantage point and dealing with multiple actors across the trading ecosystem, from exchanges to brokers to possibly banks that are providing banking services and on and off ramps to crypto exchanges, over the last few years, how have you noticed? I mean, how have these actors kind of been adopting the tools such as yours and utilizing? Are they being proactive to make sure they're staying ahead of the curve of regulators, or are they doing as little as possible just to kind of stay within guidelines?
Yeah, so we're actually seeing a strong shift to the second part, right? Where we're seeing companies being a lot more proactive. So all these segments are probably different segments, and it depends on which geography they're based on as well. But to a large extent, cryptocurrency companies earlier, like, they would wait till they grow big, or like grow to like a Coinbase or a Kraken size, or at least a Series B round of funding before they start bothering with crypto compliance. You're seeing them thinking about compliance right from day one now. So I think that's been a huge change and shift in the mentality, where they even see this as a competitive advantage. They feel that if they're closer to the regulator, abide by the or follow the rules, then that gives them a competitive advantage over the others. So we've seen that trend even with our tools adoption, where 2 years ago this was a good to have, where the larger players would get it for protection, but smaller players would still wonder if they needed this, like blockchain forensics tools like ours. And now it's very clear that they require our tools, and there's a lot many more questions on how can you even go beyond just looking at just databases or wallet addresses. Can you implement behavioral analytics that's used in traditional finance to this space, right? So the industry has matured substantially, especially in the cryptocurrency space. In terms of financial institutions, so I think, again, 2 to 3 years ago, most large banks had a negative stance on cryptocurrencies, or would avoid cryptocurrencies because of regulatory concerns. I think that has changed in just like the last 6 months due to the price rise and all the regulations coming about. Most of the large banks now have a cryptocurrency strategy, and they see that as part of the bank staying relevant with the rise of technology. So they want to encourage cryptocurrencies. They know that their high net worth individual clients are asking for certain services, and they've made an active push to it. And you can also see that in the teams they've set up, where earlier I think they would just pick the only person in the bank who knows about cryptocurrency, and they do some experimentation but never really implement anything. But now almost every big bank has a crypto custody arm or a digital assets arm, where they've actively started engaging with regulators on it and made a compliant system already.
Yeah, no, that is interesting. And I think you mentioned exchanges are being much more proactive now. I guess looking back over the years, as some of these young exchanges, which have become kind of global monsters now, started out, I think that part of the frustration was that quite often they were seeking out regulation, but there was limited regulation being offered, and the regulators themselves were being quite reticent to rush out specific regulation for crypto asset trading venues. So they would mostly do what they could. In Europe or in the UK, it might have just been having to conform with AML registration requirements, etc. But there was always this gap that then they felt that prospective customers were maybe being ruled out and alienated because there weren't specific actual regulations about how the exchanges should operate themselves, like it might in other markets, in equities markets or in derivatives markets, etc. So it does sound like we're on the path to kind of getting there to that stage. And you mentioned it differs potentially across different jurisdictions. So if we look at the main kind of main regions where some of the larger crypto asset exchanges are operating, whether it's the US, in Europe, or in APAC, from your perspective, who's sort of taking the lead and who's likely to be positioning themselves to take advantage of this industry?
Yeah, I think the second question, I mean, both these questions are a little difficult to compare because every jurisdiction has their pros and cons. So on account of that, it's very difficult to compare them on a side-by-side basis. What might be useful is just like probably talking about the different approaches that the US has versus UK and Singapore. So I think now the US has been quite progressive in terms of cryptocurrencies. All regulators are aware of it, rather than in India or a China where they're still battling on whether they're going to deal with them or not. They've very much accepted that cryptocurrencies are here to stay. We'll regulate them, and we're also going to impose reporting requirements on them, right? And that's like the UK as well as Singapore have taken a similar approach there, where they've started regulating cryptocurrencies. The US also, in terms of the OCC, saying that banks can provide, federally approved banks can provide crypto custody, and moves such as those, like even their Technology Act, which talks about including blockchain in terms of like the new technologies apart from AI and quantum computing. I think all of that is quite forward thinking. It definitely positions them very well towards it. And Singapore and the UK, on account of their size, are definitely taking advantage of the regulatory route as well and their geography. So the UK would probably be the go-to place for a lot of European companies to register their crypto exchange. And in Singapore, you see a lot of the Asian companies, or the Asia base is set up in Singapore to a large extent because of their regulations. On account of Singapore's size, they've been extremely effective in terms of not just coming up with regulations, but also constantly iterating on that based on like just communicating with the industry, and then also communicating very clearly that this is what they will regulate. And for now, they're not regulating this. They will still wait for those particular segments to evolve. So I find I've always been impressed with that approach, and where like the regulator, although they continuously keep on putting regulations out there, they make sure that they hear the opinion of every player from the smallest to the biggest. So I think due to their size, it's been a unique advantage they've had, and they could actually take the industry along with them in that respect as well. And shorter term, I think you're going to hear a lot of complaints across like all these jurisdictions because of the additional regulations. But I think longer term, it's good because you will see a lot more financial institutions being comfortable entering the space because of clear regulatory guidelines.
Yeah, and I think something that I've often repeated over time is like, regulations are often demand driven. When an industry is still small, maybe it doesn't have sort of much economic impact on a given jurisdiction. There's very little incentive for regulators to really go out of the way to lay down serious frameworks. But obviously the industry's grown massively, not just in terms of trading volumes, but now if we're seeing established financial institutions want to establish trading desks or offer services to their clients, the demand from them is probably going to have more of a significant impact, or at least help the cause for everyone working or operating with the industry to encourage regulators to really get moving and put correct frameworks in place. I mean, you mentioned that, so it sounds like there's that communication and dialogue is there in Singapore. We've seen the establishment of some very solid and respectable trade associations representing the industry as a whole across jurisdiction. Do you sense that dialogue is ongoing and being considered, at least, so that all regulators are considering, especially in Europe and in the US, they're also considering the industry's voice?
So I definitely think so. So there are a bunch of trade associations, and they have members from the biggest crypto companies. I think even regulators understand that it's more of a collaborative approach, where they need to get the industry on board. How do you safely regulate it without completely stifling the industry out. And they also intend to foster innovation in their particular geography rather than implementing something that's so archaic that it leads to a flight of companies outside of their jurisdiction, right? So that collaborative approach has definitely been happening. The only issue is that the cryptocurrency industry moves very quickly. So that pace of development is something that regulators have to constantly catch up with, because every time they regulate something, a new entity comes up, and then that's again like the flavor of the month. And what do you do about that, right?
Yeah, no, absolutely. And I think that kind of brings us nicely onto our next talking point, because I think it's safe to say that with centralized exchanges, when regulators started looking over the fence to see what's going on, there might be certain pieces of infrastructure that that are required in traditional markets and might not have been in place within the crypto markets, but at least you had these very clearly identifiable trading venues which were acting as on and off ramps into cryptocurrency. And probably they felt, well, over time we can bring in very similar regulations to what and apply similar regulations to what we have already. But then, as you said, things move at light speed in crypto, and especially in terms of technical development. Just in the last year alone, we've just seen this huge explosion around DeFi, the idea of NFTs, where they might be, questions rising about where NFTs might sit in terms of how they're classified by regulators. As we said at the top of this conversation, FATF recently, the Financial Action Task Force recently put out guidance, and they're basically, they put out guidance for their members and regulatory members across the globe. And they updated their guidance and specifically flagged DeFi and NFTs within that new proposed guidance that they'll be debating at the end of this month. So can you just give us an overview as a preview of that discussion, which we're going to come back to in a few weeks, of what the main highlights are in that new draft proposal from FATF and what we need to be thinking about in advance of that plenary at the end of the month?
Yeah, I think that the draft guidance was a great way for them to get feedback from the industry. The FATF has actually expanded the scope of virtual assets to clearly include decentralized exchanges or DeFi companies. And they've also mentioned that all the AML CFT obligations of WASPs would also apply to DeFi companies. And in certain cases, NFTs. I think that's a very wise move. So currently, a lot of the DeFi industry is unregulated to a large extent. So the founders are based somewhere, the team is distributed, and there's no clear understanding of which jurisdiction it should be regulated under. And we do our own internal analysis as well in terms of how much, in terms of funds from criminal activity or even mixers flow into different entities. And we saw this shift where earlier, some of it would flow to fiat exchanges. Then they started flowing to crypto exchanges. As those got regulated, now some of the payment processors and DeFi companies have started attracting these actors. So in terms of timing, it's perfect timing in that they were forward thinking and they wanted to regulate DeFi. The problem with DeFi is, unlike centralized exchanges, it's very difficult in terms from an enforcement perspective of how you want to regulate a DeFi company, right? And even monitor them. It's a lot easier to do that with exchanges, whereas once you start regulating DeFi companies, it would also become difficult for you to enforce like those regulations across different jurisdictions in DeFi. And in terms of NFTs, again, like I think we see this clearly across all industries. Wherever there's like substantial amount of money flow, eventually criminals find a way. It becomes an avenue for them. Like art has been used in various money laundering strategies because of the peer-to-peer nature of a lot of art transactions. So you can see that getting transposed to the NFT space in the future, especially as it becomes more mainstream and there's more liquidity and understanding. Currently, Bitcoin still has the major chunk of all criminal activity, but that's more of an awareness issue. As more and more criminals learn that how DeFi works or how NFTs work, they would start migrating there because all the other entities are getting regulated. They can no longer use an exchange to launder their funds, so they'd start using these means.
So how the this new draft proposal is laid out? If someone's developing open source software which runs as a decentralized exchange, for example, who's culpable for any kind of illicit activity that's kind of that happens on that network? I mean, is it literally a case of the developers have to be the ones monitoring the software that they are publishing?
So I definitely think that this is that was just the guidance, and we will know in the end of June what the actual proposal that they put forth. And I think a lot of countries might adopt that approach where the smart contracts developers could potentially be held liable, but I'm still confused around whether they should be the ones, because like currently in a lot of use cases, it's literally the beneficiaries or the owners of a certain instrument that are considered liable. So should you consider the developers liable? In case a customer transacts with this protocol and they've transacted with a criminal, should you consider them liable? So should, like, say, OTC traders that deal with DeFi pools also do their own AML checks when they transact with them, right? So these things are still, in my mind, these are things that still need to be figured out in the DeFi space, which is why the enforcement is going to be a lot trickier. And especially when it operates in a cross-jurisdictional fashion. So how do you target regulatory arbitrage once you've enforced any of these requirements as well is something to watch out for.
Yeah, and again, we discussed earlier about how centralized exchanges are now being much more proactive in making sure they're ahead of the regulatory curve. And are we seeing, and we saw, I think there was a good example recently when there was, the murmurings started around the requirements of, VASPs having to apply accountability for the travel rule, and a number of the actors within the industry then started working together to set standards and provide publish tools which would allow them to comply with the travel rule, for example. And I think we're seeing a little bit of that, or the early signs of that in DeFi, that developers of DeFi platforms know that there may, if these platforms are going to scale and attract kind of wider, more professional or institutional adoption, there's going to have to at least provide modules which will allow them to conform. So maybe a KYC module which sits on top of the decentralized exchange, which might be optional. Are you seeing any signs of that and how that's already developing within the DeFi space?
Yeah, absolutely. So I think a lot of the larger DeFi protocols, like the ones which have revealed the names of their founders and want to go the regulated way, are definitely considering a split between an unregulated and a regulated entity. So this is to provide more comfort, right? Like if they deal with financial institutions, the financial institutions want to deal with their liquidity pool, they need to have some controls and checks in place. And so far, it's still been to a large extent proactive, but I think in this case, it is definitely beneficial for them to think about it proactively and try and adopt some types of KYC checks. Else they could be held liable retrospectively as well. So it's not absolutely clear whether they're liable or not. So the sooner they do it, the better it is for these protocols. A lot of them, I think, come from financial services, even though they have technology backgrounds. So they understand that that's only going to be the next natural step in the evolution of that industry.
Yeah, and I think it's important, and the hope is, it's fantastic that this, the dialogue between the industry and the regulators is clearly taking place. From the regulators' perspective, they need to hopefully be able to recognise that it might still be early days, but if allowed to evolve as people within the industry want it to, we could end up with a whole set of tools which vastly improve on what's available and possible within traditional financial markets in terms of transaction monitoring. So do you sense that we is there a real risk that regulators just come down too heavy-handed, try and shoehorn existing rules and regulations into this nascent industry? Or do you think there will be that sort of, they'll allow that room to breathe and hopefully for the industry to build better systems?
So the industry has actually grown very fast, where I think now every financial institution is involved in cryptocurrencies, as we discussed before. So, I mean, unfortunately, it looks to me, at least, like most regulators would apply, say, similar laws or similar rules that they've applied to financial institutions across these new cryptocurrency companies. So that's an unfortunate circumstance of the evolution of the industry, right? It would foster or it would hamper innovation to a certain extent at the benefit of keeping customers safe or reducing the number of harmful events that can potentially happen for the people. But while that is happening, I think the converse is also true. As more and more of these traditional financial services regulations get applied to the cryptocurrency industry, more institutional interest is also developing rather than just retail interest. So I guess that's sort of the balance, where it will stifle some of the non-compliant players in the shorter run, but longer run, there will be much more capital, much more serious interest towards this industry as well.
Mm-hmm. So it's probably not only a challenge for regulators to keep on top of all of these innovations, I'm sure it keeps you awake at night as well, with seeing kind of all of these new networks materialize seemingly out of nowhere. And for Merkle, firms such as Merkle Science, keeping on top of all of that innovation yourselves and making sure that you're able to expand your tools and services into these new markets. If we look forward over the next year or two, and given what you're doing as well, looking at the DeFi space, where do you see your part of the industry, or how do you see your part of the industry developing, and what are the tools that you will be offering out potentially to regulators to help assist with their oversight in the years to come?
Yeah, absolutely. I think that's a great question. We do always think that like tools or companies such as ours lag behind because there's so much progress. Criminals are always a step ahead of these RegTech tools. So we're always working towards the latest problem statements in the industry and what's happening and where the criminals are migrating towards. Our long-term mission is to create infrastructure that enables cryptocurrency companies to transcend and merge with the financial services industry. So everything that we do, we focus, currently our focus is a lot more compliance and risk-based. So that's what we're looking at. In the near future, DeFi is definitely an interesting piece we've been working on. We did some analysis of DeFi liquidity pools out there, and I think you'll be seeing that in the future. There'll be an announcement from our end where customers or traders can get an idea of the risk profile of certain liquidity pools that they're using. I think another unique piece about us is that because a large portion of the tech team is from PayPal, we also apply behavioral analytics to a lot of our on-chain monitoring. So we don't just look at a database, say an address belongs to a darknet and that's suspicious. We're also working on models to determine just on behavior, whether an address is suspicious or not. So based on their transaction volumes and frequency, I think going ahead as privacy becomes inherent on blockchains, the ML-based or behavior rule engine-based approach is going to become more and more important. So that's a major piece of the direction we take right now as compared to a lot of the other players. So focusing a lot more on new opportunities as well as behavioral analytics on top of existing databases.
Yeah, no, that's all fascinating stuff, and it is going to be super interesting to see how all the industry as a whole kind of matures together. It's I guess there's always going to be a game of cat and mouse between the good guys and maybe the not so good guys. But that's been the way of the world since kind of trading and financial markets existed in the first place. So look, we've got this we're going to be coming back to this later in the month. So thank you for joining us today and giving us this preview. And we'll certainly come back in a few weeks' time and take a look at the results of that next FATF meeting and see what the industry needs to look out for. So thanks for joining us today, Mriganka.
Yeah, thanks a lot for having me, Paul. I think all in all, it was great conversation. And I guess the takeaway is, while regulations are coming, it's not all bad. Like longer term, it'll lead to just more institutional interest. So at least for us at Merkle Science, we are definitely more excited by it. And it just signals that the industry is growing larger as such.
Absolutely. Thanks again.
Yeah.
See you soon.
Yeah.